Ron, we are here and we are awaiting this jobs report. You know, we've been kind of building up to this through the course of the morning. Half an hour from now, we'll get that jobs report. And it strikes me that you have a pretty good idea about what's happening in the economy. Even though you're a long-term investor, you step back from all of these things. You invest in so many companies, you have to have a good expectation of what to anticipate in the economy over the next 12 months or so. What are you thinking?
I think there's no question that the economy is slowing. Companies are laying off, not hiring. You know, for our business, we're steady as we go. We just keep growing. So we just increased our office space. We had 48.9 and 48th floor. We've just added the 47th floor, building it out right now. We've never in the history of our firm had a layoff, not one. And so last year was the only year we ever were down in number of employees. We went from 168 to 170 or 169 to 168, one person. We had 8 or 10 open positions, couldn't hire them. This year we've gone from 167 to 185. So more space, more offices, more people. And so and long term, very, very optimistic about, I think economic growth is going to accelerate over the future. And I think that, you know, so I buy into Elon Musk's idea about investing. He said that to be successful, you have to be optimistic, and you have to have a long-term perspective, and you have to, you know, so you can't be thinking about the next quarter. And just, you know, the best time, Buffett says it, is the best holding period is infinity. You know, holding forever as long as you can. So, you know, I would make one other point, and that is that if you were prescient enough to sell at the exact top of the market and buy back at the exact bottom of the market, it was down 30% or so, that's how much you need to break even for paying taxes and everything. So if you're if you're able to sell your whole position and buy back your whole position, which of course you can't, so since you can't do this anyway, then all I do is just keep investing in these businesses that we think are going to get to be much larger and grow much faster than the economy and protect ourselves against inflation. Simple.
Are you a fan of what the Fed's doing right now? Do you worry that they're going to put us into a deeper recession, or are you more worried about inflation getting out of control?
You know, every time there's a pandemic, there's a war, there's a financial crisis, every single time after that, there's inflation. And the reason for it is that in order to get out of those problems, you print money. And so when everyone says that they were behind the curve or they didn't do, this is planned. It's planned to devalue your money, and the reason they devalue your money is because that's how they pay off the debt that was incurred in order to get out of the problem. So it's always the same thing. It's always this inflation that takes place after we spend all this money to get us out of the problem. We understood that in the 1930s we had this depression and we couldn't get out of it. And the only way you got out of it was during World War II. That's how you escaped it. So now we've learned that if you print money, you spend money, okay, so it makes your money worth less, you devalue your currency, but long term, that's a good thing because you create jobs and you create, so that's what you do. And that's going to end. So I think the Fed's doing the right thing.
We had Sam Zell on yesterday. He agreed. He thinks the Fed is doing the right thing at this point, even though he thinks they started too late. But he said one thing that was pretty concerning, just that the next step is probably going to be a liquidity crunch. That's similar to what we've heard from people like Jamie Dimon, from Ray Dalio, from Paul Tudor Jones. If you're fully invested right now, what happens if there is a liquidity crunch, and do you worry about something like that in the markets?
So we have flows. And there are people who are interested in investing with us, large sums of money. And if they have opportunities, then they'll get better prices. And if the markets go down, then I'll lose money for a while. But long term, as we talked about before, the Dow Jones was 800 when I started. It's now 32,000, 40 times. And I think growth is going to be faster in the next 20 or 30 or 40 years than it has been for the last 20 or 30 or 40 years. And all the growth in the whole world has taken place in 200 years. So here for 1,800 years, from the birth of Christ until 1800 to the Industrial Revolution, there was a quadrupling in number of people and the size of the economy. So it means you doubled your money in 900 years. So think about this. You're a stockbroker, a money changer, and you're trying to get clients to say, listen, Becky, I think I could double your money in 900 years. That's the way it was. Now, in the last 200 years, the economy is up 100 times. 200 years, 220 years. Then it was up 4 times in 1,800 years. That growth is accelerating. It's accelerating in the past 50 years before that. So I'm thinking growth is going to be faster going forward than it has been before. All this new technology you're getting for healthcare and technology, growth is going to be better. Our life standards is going to be higher. And this is an amazing time to be alive. I just want to try to stay alive as long as I can.
But is that a concern about a liquidity crunch? Do you think that's potentially the next step for the market?
If you're Jamie Dimon, you know a lot more about this than I do. And when there's a liquidity crunch, then the government prints money to get out of it. I think that there's.
What if they can't this time because of the inflationary picture?
They always can. They always figure out things. There's always problems that they have to face, and they always resolve them some way. There's a lot of power. Governments have a lot of power.